Hi, and welcome to another episode of Bypoint ASX. I'm Mac in Oz. Today we're looking at the Macquarie Group, MQG, on the ASX, a name and a company most Australian investors will know all too well, hence the title of the video. Now, this is what Macquarie is all about. In the popular consciousness, home loans, golden retriever stuff. As I say, if you're not familiar with Macquarie, that would surprise me if you're interested in the ASX. And this is an investigation of how that familiarity may have translated into a disregard by investors for the growth potential of an ASX top 20 stock. As usual, here is the cold, hard, classic black spreadsheet. And what, or price chart, I should say. As I've said before, what we're looking for at Bypoint ASX are stocks that are not challenging to retail investors. So what this means in the most simple terms is a stock which has, for the duration of its listing on the ASX, maintained a consistent pattern of travelling upwards and to the right, generating growth. What we're looking for are companies about which you have no doubts when you say that you are confident they have not reached their all-time high price, because if you're confident a company is going to continue to see an increase in its share price, why would you not invest in it? Now, Macquarie is a bit of a different case, and just to establish what we're talking about here, I thought we'd have a look at the primary investors. This is just a list of recent transactions. But as you can see, we're talking State Street, BlackRock and Vanguard. Macquarie is the epitome of the conventional stock market investment. And here's where the contempt comes in. These are the financials and the basics about the company. You can see revenues have been flat for a decade. Operating margin has been contracting for a decade. Net profit after abnormals has managed to increase, but it's certainly nothing exciting. The PE ratio of 24.59 is high for a well-established financial institution. The dividend of 3% is low for a well-established financial institution. There might, to the naked eye, not be very much to attract an investor to Macquarie, but there's the market capitalisation at an $84 billion company, which has continued to grow on a fairly standard trajectory for the last 30 years. Again, here's where some of the current investor disinterest in Macquarie might come from, because over the last few years, and essentially the period post-COVID, is the period that we should be most interested in, because that major black swan event shook up the entire market globally. And has brought any weaknesses or inherent weaknesses in any companies to the front of mind. And you can see here that Macquarie has, over the last few years, recorded a series of negative surprises in terms of earning announcements, forecast earnings, and actual delivery. The problem seems to be growing smaller in terms of the expectations the company creates matching to its performance. But again, the proof is in the pudding, and the share price has continued to rise. Here is the relevant price action chart with the simple moving average envelope overlaid in the period since COVID. And you can see that while, as with most stocks, the recovery process has been a little bit shaky, still you have this constant movement of the price action line moving upwards and to the right. Most recently, we've seen the Trump chaos induce a major drop in this stock as well as the market generally, but Macquarie seems to be recovering from that. And here is the most significant period, which is obviously what's been happening with the stock this year. Now, as you may or may have not picked up, one of my personal focuses this year is to try to get a better understanding of what indicators we can use to interpret this consolidation pattern in the MACD. This is the normal buy point that buy point ASX is built on, a deep buy point on the MACD below the zero line, indicating the potential for significant growth when taken or when interpreted in the context of other factors, such as the historical movement of the company's price action line. So the gist of what we're saying here is, if you're looking at Macquarie, the reasonable assumption is that the price is going to continue to rise as it has done essentially for the last 30 years. Market general black swan events notwithstanding. In terms of when to buy Macquarie, if you are looking at Macquarie, that is a more difficult proposition when it is in this period of consolidation going sideways. So the rationale really is that if you are confident that a company's share price is going to continue, then with a period of consolidation, especially after this kind of generalized black swan event, you come to the position where any time is as good as any other time to buy the stock, if you do want to buy the stock, because the price is going sideways. Here, for those people who are interested in candlestick interpretations, is the candlestick chart for just the last few weeks. You can see you've got a great number of these indecision candles, and nothing stands out as being a signifier of imminent growth. And again, part of the reason that we are now looking closely at candlestick charts in the immediate lead up to a buy decision is to determine whether or not there is value in interpretation of the candlestick charts in terms of timing a buy decision when looked at in conjunction with the MACD. Nothing stands out to me at this point, but of course this is meant as general information, so it is up to each individual investor to look at the information, interpret it, and then make their own decision according to their own interpretation of the data that is before them. Here is the disclaimer. If you are finding value in these videos, please click the like and subscribe for the obvious reasons. And I'll leave it at that and see you again tomorrow.